Central Bank of Nigeria reduces open market operation and primary market auctions to 2.99 trillion naira. And Securities and Exchange Commission to complete the electronic dividend mandate management system by third quarter of 2022. In Sub-Saharan Africa, mobile money transactions hit $403 billion. And finally, Kenya's economy booms as Tanzania softens borders. Thank you for joining us now, and here are some of the stories we're filing at this hour. I am Frank Komalape. Now, the airline operators of Nigeria, the umbrella body for domestic airlines, on Sunday cancelled its decision to halt flight services across the country beginning Monday. However, before the airline operators of Nigeria announced the cancellation of its earlier decision, 5 of its members had already declared that they would not join in the plan to suspend flights from Monday. This came as the federal government revealed on Sunday that it had been supporting the operators and provided a bailout of 4 billion naira to domestic airlines during the COVID-19 pandemic, despite the past and present states of indebtedness by the carriers to government agencies. Also, members of the House of Representatives on Sunday stated that they would meet with airline operators on Monday following concerns by the carriers as regards the astronomical jump in the price of aviation fuel from 190 liters to 700 naira per liter. The Federal Ministry of Aviation disclosed this in a statement issued in Abuja by the Special Assistant to the Minister of Aviation and Public Affairs, James Odaudu. Away from there now, on the backdrop of maintaining its monetary policy actions with the aim of decreasing money supply in the economy, improve macroeconomic liquidity, the Central Bank of Nigeria reduced open market operation and primary market auctions to 2.99 trillion naira in first 4 months of 2022, the CBN financial data has revealed. The CBN, in its financial data for the first 4 months of the year, disclosed that it auctioned 2.99 trillion naira government papers between January and April, indicating a decline of 17.3% from 3.62 trillion naira between January and April this year. Analysis of the financial data revealed that as primary market auction increased by 24% between January and April to 2.42 trillion naira from 1.95 trillion naira in prior period of last year, open market operation auctions dropped by 66% to 570 billion naira from 1.66 trillion naira recorded between January and April 2021. Open market operation refers to the CBN practice of buying and selling securities on the open market in order to regulate the supply of money that is on reserve in banks. And this happens whenever the Apex Bank believes the inflation rate is high due to increased money supply. It sells open market operation at the secondary market to mop up excess liquidity in the system. The Central Bank of Nigeria may raise the nation's benchmark interest rate as inflation rate heads to a 7-month high. The Apex Bank is projected to abandon its dovish stance and start a tightening cycle by raising the baseline interest rate in response to spiraling inflationary trend, which is expected to hit a 7-month high. The next announcement. The National Bureau of Statistics is scheduled to release the April 2022 inflation rate ahead of the meeting of the CBN's Monetary Policy Committee on May 23 and May 24, 2022. Economic and finance expert at the weekend said this spiraling inflationary trend will continue, and the third consecutive increase expected for April will be a game changer for the Apex Bank. They attributed recent dynamics in the nation's financial market as anticipatory moves against the headwinds. CBN's monetary policy rate is currently at 11.50%, but experts have predicted at least 50% or 50 basis point increase to at least 12%. A recent report has revealed that Nigeria failed to produce 22.65 million barrels of crude oil valued at 1.22 trillion in the fourth quarter of this year due to its persistent inability to meet the crude oil production quota approved for the country by the Organization of Petroleum Exporting Countries. An analysis of data contained in various OPEC reports released in different months this year revealed that Nigeria was unable to meet its oil production quotas in January, February, and March, respectively. Figures obtained from OPEC disclosed that the crude oil production quota approved by the organization for Nigeria in January this year was 1.68 million barrels per day. However, in the highlight of OPEC's latest monthly oil market report for April 2022, it was observed that Nigeria's crude oil production from secondary sources in January was 1.41 million barrels per day. This declined to 1.37 million barrels per day in February and dipped further to 1.35 million barrels in March this year. And in the meantime, the federal government, through the National Automotive Design and Development Council, NADDC, has disclosed that it has launched a 200 billion vehicle financing scheme. This is to allow Nigerians own vehicles without necessarily paying for them, as it is done in other developed countries. This was made known by the Director General of the Council, Jelani Aliyu, when he addressed newsmen on efforts of the council to discourage the massive importation of used vehicles into Nigeria yesterday in Sokoto. But while the council boss bemoaned that over time the average Nigerian has become unable to purchase a brand new vehicle like it was usually done in the 70s and 80s. He, however, stated that the council is in talks with the Central Bank of Nigeria, JAIZ, WEMA, and Zenith banks to provide a single-digit auto financing to assist Nigerians to buy made-in-Nigeria vehicles. Recall that in February 2021, the federal government announced plans to launch a vehicle finance scheme that would help Nigerians own new cars. This was part of the 5-point comprehensive program of the National Automotive Industry Development Plan, which is aimed at promoting local production of vehicles and their parts. Now, Sub-Saharan Africa has seen the most significant increase in mobile money with $403 billion in transactions in 2020, as East Africa maintaining the highest transaction values. According to moneytransfers.com, West Africa is still proliferating, with Nigeria and other countries within the bloc achieving a 60% increase in transaction value since 2020. It further stated that mobile money has also evolved from a narrow product service in a few markets to a global financial service. Registered mobile money accounts stood at 1.35 billion by the end of last year, an 18% growth from 2020. Last year, mobile money adoption and use increased over the previous year. Last year, there were more than 1.5 million person-to-person hourly transactions, a 20-fold increase since 2012. Away from there now, the Securities and Exchange Commission has assured the investing community that the automated process of the electronic dividend mandate management system will be complete by the end of the third quarter of 2022. A Director General, Lamido Yuguda, disclosed this recently in an interview that the progress of the e-dividend mandate management system has been hampered because registrars are yet to upgrade their systems, while adding that the automation of these processes will be done at the end of third quarter of 2020. He said, in the quote, "There have been challenges in the identity management initiative, especially the manual and cumbersome EDMMS process, and the fact that some registrars don't upgrade their system to provide self-service function were also deliberated upon. It also hoped that the process will be automated by third quarter 2022, end quote. Yuguda explained that the commissioner was doing all it could to reduce unclaimed dividend in the country, while adding that the reason the number is increasing is because a lot of investors have not mandated their accounts. You're watching Business Now, coming to you live from our studio. Still to come after the break. China's Iranian oil import is on poor margins. Bring you details and more business stories after this timeout. Please stay with us. Glad to have you back. Now, if you just join us, this is Business Now, reaching you live from our studios here in Lagos. On the African scene now, Zambia's President Hakainde Hichilema said on Monday that he was pleased China will co-chair a creditor committee during debt negotiations along with France, adding that a partial write-off of the country's $32 billion debt is being considered. Hichilema said Zambia aims to avoid another debt default after it became in 2022 the first country in the pandemic era to default on its debt, and a reduction in debt as part of the relief package. The president said, quote, "We borrowed way too much. It is one of our priorities to restructure our debt," end quote. Zambia, Africa's second biggest copper producer, is struggling with debt that has reached 120% of GDP. The debt was $31.74 billion at the end of 2021, according to official government data, of which $17.27 billion is external debt. China had $5.78 billion of the external debt. And now Tanzania's softened borders with Kenya, reduced non-tariff barriers, and solutions to bilateral issues have resulted in the growth of businesses in both countries a year after President Samia Suluhu took office. Data from the Kenya National Bureau of Statistics Economic Survey 2022 shows that Tanzania's exports to Kenya doubled in just 10 months. Before President Samia's tenure, the two countries had a number of spats on trade matters, with Dar es Salaam looking onward and imposing restrictions on trade with Kenya. The survey shows that the pandemic notwithstanding, Kenya imported more goods during the past year than before from Tanzania. The report says Kenya's economy grew by 7.5%, the highest rate since 2010, and more than 20 times the rate of 0.3% recorded at the height of the COVID-19 pandemic in 2020. Tanzania's export to Kenya recorded the highest figure since independence, according to the report published on Thursday. Now, South Africa's rand remains on the back foot against the dollar, which continues to gain strength due to concerns over slowing economic growth globally, rising interest rates, and war risk, leading to increased market volatility. The dollar strengthened versus all of its major pairs as China's COVID lockdowns, accelerating inflation, and a worsening outlook for global growth boosted demand for the currency as a haven. The dollar rose the most versus risk-sensitive counterparts, including the rand. The South African unit fought its way back against the greenback in the middle of last week following the Fed rate announcement, reaching levels as strong as 15.43 rands versus the dollar. However, by mid-morning trade on Monday, the local unit traded at the following levels against the major currencies. And on the African scene, the United States announced a record-sized release of emergency crude oil reserves in March without consulting partners in the International Energy Agency, leaving them scrambling to match with releases of their own, according to information and report. Unilateral action by Washington to address global supply or price issues risk undermining the U.S. relationship with the IEA, the world's energy watchdog that normally oversees international releases from emergency stockpiles, and could raise questions about the continued relevance of the group. The group's members have become worried that U.S. President Joe Biden is using strategic petroleum reserves to stamp down rampant domestic inflation for political reasons, instead of protecting consumer countries from a global supply disruption, according to a report. The U.S. Department of Energy said the United States had been in frequent contact with the IEA and its member states on energy security leading up the announcement, but confirmed its decisions to release the oil was independent of the IEA. And now China's Iranian oil imports in April came off peak volumes seen in late 2021 and early 2022 as demand from independent refiners weakened after COVID-19 lockdowns pummeled fuel margins and ongoing import of lower-priced Russian oil. The easing of Iranian oil purchases, which still make up some 7% of imports, but the world's largest crude importer, came as Western diplomats have largely lost hope in reviving a 2050 nuclear part, while high oil prices emboldened Iran to take its time to return to an agreement. A revived nuclear deal will allow Iran to boost its oil sales beyond China, Iran's #1 customer for the past 2 years, to previous clients in South Korea and Europe. China's independent refiners, also known as Teapot and situated mostly in the eastern province of Shandong, are key Iranian oil buyers. The refiners have since February reduced crude import, operating under half their capacity in April, as soaring prices, tighter import quotas, and COVID-19 lockdowns squashed margins, according to traders' report. European shares hit 2-month lows on Monday, led by miners as investors fretted over a sharp economic downturn in China due to prolonged COVID-19 curbs, while surging bond yields kept technology stocks under pressure. Miners fell 2.8% as Chinese iron ore futures plunged more than 6% on concerns about demand in the world's second-largest economy after data showed April export growth slowed to single-digit. Tech stocks dropped 2.1% to December 2020 lows as U.S. and European government bond yields surged to multi-year highs on bets for faster interest rate hikes aimed at taming a surge in inflation. The benchmark stock 600 has shared over 5% so far in May as China's COVID curbs, aggressive monetary policy tightening, and the Ukraine war stoke concerns about a global economic slowdown. The index is down about 14% since hitting an all-time high in January. You're still watching Business Now from our studios here in Lagos. We'll take a moment now. When we return, Mr. Michael Nathaniel will be here with more news stories. We'll be back in a moment. Please stay with us.